right, everybody. Good morning. Happy Thursday. This is the morning show here on Stock Market TV. Spencer Israel, JC Perez, Steve Straza, Alfonso de Pablos with you today. What's up, chat? How we doing? Josh, Joe, Rachel, Yosel, Dawson, her. I'm sure I'm missing a few yous guys. What's going on? All right, still in the bull market, in case that wasn't obvious by now. So we'll talk about that. I went on a bit of a crypto buying odyssey yesterday, so we can talk maybe about that. I do want to talk about Disney. They just reported, one of the few stocks that I actually own. Actually, one of my longest held positions. So that's of interest to me. I know it'll be of interest to Steve as well. I don't know about JC, but whatever. See what happens. We'll have Kenny Glick join us today. We'll have Sean McLaughlin join us today, and our special guest is Jerry Parker from Chesapeake Capital, turtle trader. I think he was on the show actually almost a year ago now. And if you recall in that show, he joined with a parrot on his shoulder. I don't know if he'll have the parrot again today. I don't know if parrots are like a early bull market or like a mid bull market thing, but we'll see. So that'll be a 9, and that's the plan. So smash the like, and let's get this show on the road here. Here we go.
All right, what's up, Mr. Spencer Israel? You're such a gen these days.
No, like we were talking yesterday, like on a call about like buying some of these meme coins and like how to do it, and I was like, well, I've never done it, so I should do it. And yeah, it turns out it's not the easiest thing in the world if you want to buy some crazy out there meme coin.
It is now. You're just doing it wrong.
Well, I did not do the Nicki Montana thing. Maybe I should. I should have started with that.
Why are you making your life so difficult, Spencer? It's never been easier.
Right. I chose not to go. I wanted to try it, like, you know, the on chain way, so to speak.
As opposed to what?
About that later, but it was not so easy. It was and actually, spoiler alert, I didn't actually buy anything. So in case you're thinking that I didn't. I tried.
We need to sit down, bro. This is really, really easy to do. So the fact that somebody intelligent like you couldn't figure it out, like you're doing something wrong. Like it's really simple, bro.
Well, part of the problem was that I wanted to transfer money from Coinbase rather than just deposit new money, but most of my crypto is staked. So that was like something I didn't think about, and you can't transfer staked crypto. So that kind of sucked. But anyway,
we'll have a sit down, Spencer. This is really
no. I don't want to have.
I think you're putting it on a pedestal. You know, I think you're putting it on a pedestal.
Maybe I think it should be like out in the open, because I think a lot of people are like me, where like even if they wanted to buy Peanut the squirrel, they may not know how. Right?
Yeah. So it's on Radium. It's really simple. It's actually easier to transact on Radium than it is on the New York Stock Exchange.
I remember when
what a time to be alive, Spencer. What a time to be alive. Peanut the squirrel up 20x in 48 hours.
Yeah. Yeah. Do you remember when the CME launched? I think they were the first ones to launch the Bitcoin futures, and I remember people were like tagging at CME on, like, how do I add CME on Twitter? How do I get an account? It's like, you don't tag the CME.
Yeah, that's not how to do it.
It's not with them. No. But hey, live and learn, right? Let's do state of the markets.
Shall we? All right, ladies and gentlemen, we've got the Dow futures this morning. Up about 100 points. That's 20 basis points. S&P futures are flat. NASDAQ 100 futures are flat. New all-time highs across the board. 30-year bond futures flat, down to 115. Crude oil up 1%, still at 69. Crude oil loves that 69 level. Copper down 0.75%, still above 4, though. Copper been getting hit. Gold down 1%, 25.60. Silver down 1.3%. Just above 30.25, with the volatility index up to 14. almost closed with a 13 handle yesterday on that VIX, which is out of control. And then, of course, Bitcoin 91,000, hanging in there, hanging on to those gains. Very impressive. Flat on the day. Ethereum flat, just under 3,200. Oh, I don't know for whatever reason I took this out. Hold on one second, guys. Solana 215, flat on the day. Binance up 2%, 630. Very impressive, Binance. Total crypto market cap, Spencer Israel. You ready for this? 2.93. And as it turns out, actually did this week briefly hit that 3 trillion market cap before backing off. This was yesterday, as a matter of fact. Hit 3 trillion and then backed off. So currently, total crypto market cap 2.938, and the Bitcoin dominance making new highs as we speak, above 61%. What stands out this morning, fellas?
I think Bitcoin dominance probably peaks and rolls over soon, right?
I mean, couldn't you have said that a month ago? I mean, you know,
it's happened in all the other bull cycles. So.
I mean, this Bitcoin dominance is very impressive. Literally, as we speak, as we're speaking, Bitcoin dominance continues to extend its gains.
It's crazy.
Here we'll throw up that chart. We'll start there because I agree with Straza. Not so much that it's going to roll over any day now, but I agree with Straza that it definitely stands out here. All right, so that's slide 2, Spencer, if you want to throw that up.
You have it.
There you go. So it continues to appreciate, I mean, really since the beginning of last year. So this is the percentage that Bitcoin represents of the total crypto market cap. So at this point, just over 60%. So just to put things in perspective, total crypto market cap is about 3 trillion, or just under, just a couple of pennies shy of that. And Bitcoin market cap is about 1.8 trillion. So, right, about 60%. So very, very impressive. So, you know, what Straza's talking about how in every other cycle, Bitcoin dominance eventually starts to roll over. The reason for that is because other cryptos really step up and start eating into that total market capitalization. Where I would push back on Straza is the Bitcoin Ethereum ratio, because that's really what it is, because there's nothing even close.
Not as much as it used to be, though. It's becoming less and less the case, at least.
Yeah, but Solana's only 100. Ethereum's 4 times that. So think about that. For Solana to eat into market cap, it needs 4 times the move that Ethereum needs to eat into the market cap, right? So think about it. You got Ethereum just under 400, and then so the Bitcoin dominance is really representative of the ETH BTC ratio, which literally, as we speak, is making new 3-year lows like this morning. So that's really all it is. So if you're curious why the Bitcoin dominance keeps going up and Bitcoin continues to dominate, it's really the lack of relative strength from Ethereum. It's really that simple.
Yeah, fine. Okay, I got one for both of you guys.
Sure.
This cycle, does Solana flip Ethereum by the end of this cycle?
In market cap?
So it would need, what did you say, 4x from here? Yeah, in market cap.
I mean, Ethereum's just under 4, and Solana is at 100.
Yeah. Okay, so it would need 4x if Ethereum didn't move. Can it get it done this cycle?
Well, price-wise, it's already making new all-time highs. So you're strictly looking at a market cap, which I would argue is more important. But yes, so I would say that I mean, it needs to outperform by quite a bit to exceed Ethereum. I mean, it needs to go up 3x.
I know. We just explained the math. Is it
right?
Bigger by
And
the
that's
end
with Ethereum flat.
Right.
So you're assuming that Ethereum is going to be flat in that environment, which it probably won't. So
yeah, that'd be tough.
5, 6x
I mean,
probably.
it's possible. Sure. Yeah, it's possible.
Solana flips it this cycle.
But you're going to need a 5 or 6x.
I mean, what did Solana do? 80 last cycle. So okay.
Let's throw up. Listen, I love a good short squeeze, especially when there's politics involved.
Which one?
Absolutely love it. Throw up slide 3.
So many good ones. So I was talking to Sam. What do we have? Like 7 or 8 setups in the freshly squeezed. Right now is the time for more setups, more bullish chart patterns, more trade ideas. Time to press the gas.
So here's what's happened, which has been really, really nice to watch. So first of all, you've got the bears, right? Just natural born losers like that you'll have in every cycle, right? They're
Yeah.
getting squeezed hard, like really, really hard. So it's not just the bears that are short, it's the bears that are lacking long exposure, right? So it's just horrible for them, which is great.
Mhm.
And then you have a segment of bears that are Trump haters, like crazy, like the extreme libs that are freaking
Mhm.
out. So
Mhm.
what's great is that you've got the extreme libs that are freaking out because not only are they not long, right? The bears, I'm saying specifically, not only are they not long, in some cases they're short, and the guy they hate the most is getting all the credit for it. And the guy and his cohorts, like all his friends that they hate equally as much, are getting all the credit for it. It makes it even worse, which drives them even more crazy. And ladies and gentlemen, this is the perfect set of ingredients for an epic short squeeze, and you're seeing it.
Yeah.
You're seeing it. It's great.
So many of them have been working. Like, look at this 10-day rate of change here. These are all moving to the upside in a big way over the past 2 weeks.
Can you explain that to the folks, guys? If you're listening out there, listen to what Straz is saying as to why this is so important. Just because it has a high short interest, just because it's got a high number of days to cover, doesn't mean it's going to rip in your face. They're short for a reason. Talk about the momentum and why that's so important, Straz.
The mechanics of a short squeeze are such that they need the price to start rising for the squeeze to come underway. And this is probably the shortest term momentum that we'll look at. We're looking at just trailing 10-day performance here in the far right column, because you need that. Once you get a big surge to the upside, whether it's earnings or just a big broader market day that drives those gains, then you get shorts start to cover, and then more shorts start to cover, and the whole thing feeds on itself. But it doesn't happen without a little bit of short-term momentum. That's why we've kind of been talking a lot about these meme stocks the past few days, because if you look at GameStop, if you look at AMC, there's some short-term momentum in both of those charts. And that's how these crazy things get started. However, I will say the meme stocks, notice how they're not on this list.
And why is it? Because there's no momentum yet?
No, it's because they're not built the way they used to be in terms of
So the short interest is just not there anymore?
GameStop's like 12%, 13%.
Wow.
So this is important, right? Before the whole event that sparked the movie and everything back in 2020, the short interest was literally like 100% because they had synthetic shorts. It was absolutely insane. Never seen a short interest that high. Today, it's a tenth of that. So
right. So there were more shares short than there were outstanding, or something like that, right?
Rehypothecation.
we think so. It's hard to say, but yeah, it sure looked that way at the time.
All right. So the Trump haters are getting squeezed. The bears are getting squeezed. The bears that are Trump haters are just losing their freaking minds, and it's really been great theater. Like, for those of us who are like, don't get political about things because we're here to make money. The theater has been really superb. So shout out Earthlings, doing a hell of a job out there. Can we talk about the worst companies in the world?
This is them. These are them.
No.
No.
Touche.
What?
But no. Yes, you're right. These are the
We're
worst
talking about
companies in the world. But yes. Thank you. Let's go to the short report and look at the stocks that are legitimately the worst ones. Not that the ones on the high short interest are not. Strauss is right. They're on that list for a reason.
So JC, yeah, I guess this is just another way to cut it. We've been talking about this worst stocks in the world theme a lot lately. Find myself, focusing on the worst stocks in the world. Not something you really find yourself doing in a bear market.
No, but think about it like this. In a bear market, when shit is hitting the fan, we want to look for relative strength. We want to look for the stocks and the sectors and the industries that are bucking the trend, that are already heading higher while most of the market has continued lower. This is that flipped on its head, Straza. Just because it's a bull market, just because these bears are getting squeezed, the orange man, everybody loves it, Elon, the whole thing, great. But there are companies out there who just didn't get the memo, right? And these are if you didn't get the memo, if you're not making a lot of money in this market, right?
Yeah, if you can't rally in this market, companies, stocks like Moderna, what are you going to do?
Right. So, all right. So how do we think about this? So these are the ones showing relative weakness. These are the ones that are pushing down against new 52-week lows. These are the ones that are making new 52-week lows on a relative basis. So underperforming, going down on an absolute basis, just like shit. That's why it's color brown.
What stands out to you here?
Semiconductors.
Yeah, they've been weak, man. You got some solar on here.
Yeah.
I tried to build a stake in Enphase Energy. Take a look at that chart. That's called getting blown out of a position. The one that stands out most to me, shout out Wayfair. Still haven't built my furniture. Wayfair breaking down below a shelf of pivot lows here. Here's why this one really interests me. This is in that ARChy world. This is speculative growth, right? This looks like all of those other rounding bottoms that are completing right now, yet they're making new lows. Really? We just bought, Lovesac looks just like this. Love. They make couches.
Can you talk about how you think about shorting some of the stronger areas, looking for a mean reversion versus pressing the ones that have been the worst? Like, what's that thought process like?
I'm not going to it's hard to short the best stocks. I talked about buying Home Depot puts on here the other day. It's probably not going to work, right? It's this market right now is absolutely Teflon. The S&P 500, NASDAQ, they tested VWAP twice, bounced right off it, right? Buyers showed up exactly where we thought that they would. So I don't think this rally's done feeding on itself yet. I think you want to be really careful, and it's still cute trying to short. Shorting is different from taking profits, right? Very different. So sell things, but I don't think you want downside exposure really. I think more big sticks are probably coming in the next few sessions.
Even in the worst areas?
I thought you just asked about the best areas.
Right. That's what I'm saying. So rather than fading the strength, you'd rather press the weaker names. But you're not saying don't short the weaker names. You're saying if you're going to be short the weaker names. Is that what you're saying?
Even that's getting tough, right? Back to Enphase Energy. Go look at solar. Solar's that's been the short. The Trump trade thing really played out exactly as you would have guessed, and it rarely does, right? But the banks went up, the cryptos went up, the solar tanked, the coal and stuff is working. So if you look at TAN though, broke down. I think that trade's almost over. No, I don't know. Do you really want to press Enphase here? Look at the last 5 or 6 candles. This thing's been absolutely blasted. So depends on what it is. But no, I'm not particularly looking to short stuff.
I am.
I'm not. No,
I'm looking.
You're a cute guy. You like to get cute. I'm more of a trend follower. You know what that is?
I've heard. I am looking to put some shorts on. I haven't. But I'm looking out there. People think when I ask on Twitter, oh, what's the best short out there? They think I'm trolling them.
Yeah, you are.
Well, it's not so much trolling them. I actually legitimately am looking for short ideas, but a lot of those names and ideas are good long ideas. So it's Jedi mind tricks, So can we talk about how the jersey came out of Spencer this morning? He was calling people use. I caught that. You caught that?
Use guys.
Yeah. Weren't you an English major?
That's like a Jersey / Brooklyn thing. I don't know. It's just like an old timey thing to say.
Dude, when Kenny comes on, we have to talk to him about this language that people in Brooklyn and Staten Island have, where they just make up words. These words are not Italian or English. They're just these gabagol. Gabagol's not a word, right? They're just a word that's made up in that part of the world.
No, it's Capicola. And they just pronounce it gabagol.
You just replace the C's with the G's. And then
bada
bing, bada boom. You got
it's a word, though.
No, and mozzarella. That's not a word either. That's just a made-up thing. It's not a word.
Brooklyn's the best accent, though, of all the accents. I pick Brooklyn.
And by best, the worst, you mean?
It's just, I love it.
Dude, Staten Island is on a whole other level, dude.
I'm not familiar with
because in Brooklyn, you only get that thick accent, by the Verrazano, which is just an extension of Staten Island. Don't tell the people that live there that, but let's be serious. Also, the quality of the food in that part of New York City is just on another level. My front door neighbors grew up in Bay Ridge. He brings me L&B's from Money Gardens all the time. This guy's my hero.
You tell me.
Yeah. So good.
All right, should we bring on Kenny?
Yeah, bring him on.
All right.
That thing with the gabagol.
Dear Lord.
It's been a long time coming. They ain't come for my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
There you go. That's a Managut.
Hey, how you doing? How you doing? What's going on? You got the gobble goal. I got the conversation. We'll have this conversation some other time. If you guys are in the lunar, let's go, people.
Let's
the
go,
lunar.
Kenny Glick, nailing the lunar.
Listen, if what you're doing right now, if you have only options, what you want to do is you want to short the stock right above 15 and then lock in that profit. But our target was just hit about 1535. But if it breaks 1535, no, 19. This thing could go to 19. So don't forget to take profits. But yeah, let's talk about it's Staten Island is worse than Brooklyn. In Brooklyn, you still got the I don't want to call it the real Italians because listen, I have 107 Italian cousins, and my aunt would come to my house and invent words like scalabash. Where's your scalabash? Where's your scalabash? A scalabash apparently is a colander to rinse the pasta in, and she took two words. And I know that she used to call it a multi. You're a multivan. I'm like, a multivan? What are you talking about? It's a multivan. And so the words are so bastardized, but the one that really is funny is galamad.
Galamad.
It's a whole different word. Galamad. Galamad, otherwise known as calamari, or it's just unbelievable. And hearing my aunts all talk in this weird, none of them are Italian. They all just married into Italian families.
Right.
And so they had their own language of the other language. It was insane. I know I had a translator.
I got your braciole right over here.
Oh, I got your braciole. We put the braciole in the sauce, the pork and the beef. So
yeah, you got to do it.
I do make a 6 sauce. So if you're around for Christmas, I'm the one.
We only make fun of the Italians because we love them so much.
Yeah,
really, these people have brought so much joy to my life. I went to a Catholic school in Connecticut. Like half the school was from Brooklyn.
All right.
I'm a dumb Cuban from Miami. I didn't even know what a cannoli was until I started going to college. That's a
ganol. You got to just put a G on.
I got the ganol.
Yeah.
All right, Kenny, you got your charts?
Charts, farts. Who don't eat charts? Let's just talk lunar.
So,
yeah, if you sold some, look.
Why don't we walk through? Hold on, this is important. Why don't we walk through the trade because this was an absolute monster.
All right, hold on a second. But if you just shorted it, I mean, it's what's really nice about the stock. They tend to rug pull it. So if you're savvy enough, you could actually short this thing, make some money, and then wait for the options to come out. So here it is, boys and girls. I mean, it did exactly what you want it to do. It stayed down and then broke VWAP, broke pre-market high. So even if you didn't hold it overnight like we did, you actually got a better entry because we were buying it even at 1188 yesterday, 1212, and then in the aftermarket. So now that it's this monstrous move, let me show you the long-term chart, and that's why. But this is scary. This is a real chart, friends. This is a 3-year weekly where I get my Andy Dufresne's from. You come out of that bottoming pattern, usually run. And we thought, $13.35 is where you could get to because that was the high peak from there. But after that, look at this. This is ridiculous. So this is the biggest Kardashian bottom we've seen since kind of like Carvana. That's a real print. This stock was going nuts. I think it was like right after it came out of the SPAC or something like that. It really did go to 136. So that's factored in there. So just do some math and just trying to find some candles from back then where it was crashing. I'll show you some candles going back 2 years. I got to go back at least 2 years. But there's the 1325. So I got to go back more than that. But give me a chance here. Give me go back 2 years. I'll show you some other prices that we're looking for today. You got to go way back to where it was getting slammed down. These two candles right here, if we get inside those, so above 1535, we could be searching for around 1975 on the stock. So loving it. And again, the earnings are out, and now it's all about the launch. I think the launch is coming soon. So if you don't want to own it, again, I'm all about options on this trade just in case something goes wrong. And that's where we're at.
All right, give us one more. What's on the move this morning?
ASTS, going to stick with the rockets in space. I mean, the thing went nuts yesterday. We were joking around kind of about, okay, it's at 2250. We got to buy it. Next thing you know, it has a 5-point day. I believe they're reporting this morning or tonight. So keep an eye on it. You should be in play. And there was one more. Oh, yeah, let's talk about Humana. Okay. Still on the stock. It got hammered on Monday because they said they weren't going to take the stock over. And next thing you know, it made up the entire move. They're not just going to come out and say, yes, we're going to buy out Humana at 307 a share for Kenny Glick. It'll be on next Tuesday. Of course, they're going to deny the rumors, but the stock's telling you that there's something going on with Humana because it made the whole gap down right back, and it was out to an 18-point move. So still liking Humana. I mean, keep your eye on the stock. Breaks back over that 292, that 295 area. You're looking for 10 or 15 more points on it. So good stuff.
And let's just reiterate what's happening here. Talking about moon stocks, talking about, you know, smaller names. Here we are, Humana, right? So I mean, no discrimination whatsoever. Everybody's welcome into the Warlock room. Am I wrong?
Oh yeah. I mean, you give me something that's moving. But Humana was interesting because that came out of a disaster, and that was that's my favorite time to trade stocks. You know, they got, you know, some sort of massive, I forgot what it was. They unveiled some new payment structure that nobody liked. The stock got slammed, but that was the end of it. And then it's been pretty much in an uptrend. Then the rumors started to circulate around Cigna, and again, it's been in play ever since. But I really, really am talking about these last 3 days where the rumor was denied and it crashed, and now it's above where it came from. What's that telling you? Telling you something's here. So maybe it might not be Cigna, but somebody else is sniffing around, or the stock just hit a bottom and it's been a pretty good move. So I'm looking for it to go up, you know, another 10% from here, which could be, you know, 30 points, obviously.
It's a monster move, Kenny. You're killing it, dude. You're absolutely killing it. People are freaking out. Dude, people love Kenny. Like, I tried to explain to somebody the other day. They're just like, oh, so how's Kenny doing? I'm like, how's Kenny doing? People fucking love this guy. Like,
What's
you
that
are
for
like a
them?
legend. Like, Louis the other day is like, I don't understand. You know, Kenny's like open rates on the emails are off the charts and his engagement is off the charts. And Louis like, I don't understand. And I think it was like Straza or somebody's like, Louis. It's like, Louis, nobody knows who you are. Kenny's a legend. Don't you understand the difference here?
But only you guys know who I am. Nobody knows who I am.
Dude,
I
bullshit.
hang out in my bunker all day. Nobody knows me.
Dude, people love you.
I appreciate it.
It's absolutely. I don't. I think you're fucking crazy. But other people,
That's
dude,
going to be on
you
my
are like a
tombstone.
real legend. Seriously.
Oh, I'm sorry. I appreciate all your kind words. By the way, it's the Cisco. That's the other name. We're in the Cisco. I don't know how I just forgot to talk about my dad's 27-year hold. He held the jiggle for 27 years. Basically, he's in the stock from 1999. My dad. It's amazing. Just went green. This is a 1 minute. This is a 1 minute multi-day VWAP reversal, my friends. It's not going to be a lunar, but it's making us money. So yeah, again, blue line, orange line, staying above that 58.60. This is where we bought it, right here on this little double top break. Orange line is prior day VWAP, and generally when you get through the blue and the orange, you go a little bit higher, and that's the one.
Can we get Big Al on the show? Can we get him on?
My dad?
Yeah.
You know what? He doesn't have much to say. I've tried to get him on the schmooze all the time. He's like, what do you want me to tell you? Buy stocks. They never go down.
Who do you think has a cooler dad, Straza or Kenny? Because Straza's dad's way cooler than he is.
My dad's still playing pickleball, so that's all I care about right now. It's nice to see him
beating up on poor Gladys.
Oh, I played 11 games at a tournament yesterday. My back was on fire. I'm wearing a girdle today. That's my life.
Listen, Kenny, Kenny's going live tonight, 7:30 for the schmooze. It's going to be on our channel. So if you, I put a comment in the chat, but yeah, right here on the channel and in the room as well. 7:30 tonight, schmoozing, walking through trades, doing all that.
Wow, what a sell on the lunar, hit to 15. I mean, that's crazy when it hits the set exact price that you're looking for, and then it just tanks. Wow, that's a sick pullback. All right, good luck, guys.
All right.
See you, Kenny.
Adios, Kenny. Kenny Glick, ladies and gentlemen.
All right.
So I just want to reiterate one more thing before I hop.
Yeah.
You're bringing in Sean? Sean's coming in?
Jason's coming in.
All right, cool.
So
guys,
we should introduce.
I need to crowdsource this. I need to crowdsource because you guys aren't very helpful. So I think I'm meeting Ray Dalio today. What should I tell him?
Treat his employees better.
I don't think I'm going to tell him that.
No.
What should I tell Ray Dalio? Anybody in the chat? What do you think?
Yeah.
Should I just talk about the Holy Grail chart, like how it changed my life?
Yeah, I'm not super helpful here. Sorry.
Ask him how much crypto he owns.
Oh, that's a good question. That's a good one. All right. See, Straza bringing something to the table. All right, guys, listen, I'll be,
right.
Anybody, any thoughts? Put it in the chat. I'll be reading. I'm heading to the city. I'll see you guys. Adios.
All
Don't
right,
have to get us canceled, Spencer.
well, let's bring on Jason Purz. Jason's here. Jason, what up, man?
Hey, buddy.
Hey guys,
Hey.
what's up, Steve? What's up, Spencer? Good to see you guys.
All right, we thought we'd bring Jason on because of our next guest, Jerry Parker, Chesapeake Capital, and Jason. You are familiar with Jerry.
Very familiar. Jerry's a great guy. A lot of people will have a lot to learn from Jerry. Just the background and trend following, all his years of trading, the original turtle trader. I mean, there's a lot of great stuff to hear about Jerry. So excited to do this one.
Well, Jerry's here. So should we bring him on? Let's do that.
Let's do it.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Jerry.
Good morning.
Thanks for joining us again.
You bet.
Jerry, where's the bird?
I was just going to ask.
No
I changed
here.
How's the bird?
The bird's great. I got a video yesterday of the birds eating food, and I changed locations. I'm in New York City today, so the birds don't travel.
Where do you normally live?
Tampa, Florida.
Got it. How did you make out okay with all the storms this year? It's been a crazy
Not too
hurricane.
bad. Yeah,
Yeah.
crazy. The infrastructure of the towns and the cities was really the big story. We lost power for a week, and Wi-Fi and water, and no gasoline for a while. So that was
Because
a big
they're not-
story.
They're not used to getting all these hurricanes on the West Coast. This is a relatively new thing, is it not?
Well, I mean, Tampa has avoided a direct hit for 50 years. And I guess this wasn't exactly a direct hit, but I think the first time anyone had seen a hurricane come west to east, that was the big change.
Right.
So, yeah.
So, Jerry, you're one of the true legendary trend followers of our time. I know JC wanted to be here for this interview. He was asking about shorting stocks this morning in this market. As a trend follower, what would you say to him?
Well, I think as a trend follower, you definitely want to have some shorts in all the different sectors. The currencies, obviously, and the commodities and interest rates. You want to have longs and shorts. All those trades have the same expected profit, and so all you're really doing is adding diversification and some safety and hedging your bets a little bit. But if you look inside these indices, the vast majority of stocks are in an uptrend, but there are some individual downtrends that you can play, and we've been playing throughout this whole move up. So just looking at the stocks as individuals, markets not related to anything else, just the same way you would a commodity or a currency, is really the way you want to do it. Stay away from these indices. I'm kind of famous for talking bad about trend following the indices because there's so much going on in the individual markets that you need to pay attention to grab that diversification and that potential profit.
So Jerry, let's go back a little bit because I know a lot of people know about you, but there's going to be some new people on here who don't know much about you. So can you tell us a little bit about how you got into trend following as a trader?
Well, I was in 1980, in the early 80s, I was working in public accounting, and I really wanted to get out of doing that and stop being an accountant. So I started reading about trend following and subscribed to Marty Zweig's, if you know him, newsletter, and watched him on Wall Street Week. And so I was learning about trend following. I thought it was great. Take small profits, take small losses, let profits run. The big question: are these profits going to pay for these losses? And so, when I got the opportunity and I read the ad in the Wall Street Journal to go to Chicago and work with Richard Dennis, I was sort of into trend following and kind of prepared. And when they sent out a true-false test to 1,000 applicants in 1983, I did pretty well on that test because I was really into it. And I guessed that they probably were trend followers. And that was a very good guess.
Did you start in public accounting, Jerry? Were you like an auditor?
Yeah, I was graduated from UVA in accounting. and it was a mistake. Although now I'm kind of glad I know something about balance sheets and income statements that I really don't use, but it's kind of nice to have that understanding and background. But for
I
me, it's
love
just
that.
all about trading. Yeah.
So I have a similar background. I spent several years at Deloitte and Touche out of college as an auditor. Do you never use anything that you learned about financial statement analysis today? Like you have
Not
that
in the
knowledge, but you don't apply it at all?
not in the trading. No, it's all strictly 100% trend following, systematic, rules based.
Yep.
Fading the fundamentals. You know, Rich sort of taught us to don't pay attention to fundamentals in any
Right.
of the markets. If anything, you want to fade them and do the opposite. If it gets sort of one-sided, if you get into we used to be a taxi. If you get into the Uber and the Uber driver mentions he's long soybeans, you should be very nervous about your soybean position.
So do you think that your experience as an auditor, for example, in my short time in the Big Four, I saw some light frauds, a couple creative accounting schemes. You see things. Did that give you some sort of distrust in fundamental analysis and drive you towards technicals at all, or you were already heading in that direction?
I mean, I think what drove me to technicals was the objectivity of it all, the rules, and let's do a back test and come up with something that we kind of at least can say has worked in the past. It may not work in the future, but yeah, let's don't talk about things and pontificate and have a philosophy unless it's based in numbers. And that's sort of what I thought was really good. And I immediately, like I said, went to the very, very bottom line. And that is, okay, we're going to take these small losses, we're going to do shorts, we're going to diversify, and we're going to wait for these outlier trades. Okay, are these outlier trades going to cover the losses? And that's really the bottom line to it all. And thankfully, they usually do. You know, usually if you're bold enough and stick to your methodology, you can hang on to your cocoa. You know, we never got out of cocoa and OJ. We still have it. It's still one of the greatest ridiculous trends of all time. And we never reduced our position. We just stayed with it.
Are you still in those two, Jason? God.
Coco, no, not Coco. But the rest of them, yes, absolutely. Is your system that long term that you are actually still in the Coco trade, Jerry? That's amazing.
Yeah, it's long term enough. You know, another one is the coffee. We got 3 coffees that we trade: U.S., London, and Brazil. So they're doing really well too. You know, the way I look at it is, I'm just going to base my entries and exits in the long termness of what I do on the numbers. And the longer term you trade, you have a tendency to, it's going to make more money. You're kind of getting rewarded for sitting there with all that drawdown and choppiness. And cocoa and orange juice and coffee, they've had some vicious drawdowns, all in terms of just profit givebacks. And just saying just profit givebacks is exactly correct, because with the trend follower, you want to take the small loss, and a drawdown and a big mega profit is not a loss. And so you want to be kind of bold and follow the rules. And if you do the back test, it sort of says, hey, yeah, if you're willing to hang in there with the type of volatility and give back and profit give back that you're going to get by trading these longer term methods, you will make more money on those trades. But it's very difficult to do. And you do have clients who possibly could complain, because sometimes when you give back profit, it doesn't go back to new highs and keep going. It goes down, and that's really ridiculous. And you look like pretty stupid for hanging in there. And I've done that. Oh, nickel, you know, I can name numerous trades. You talk about the good ones. There's so many bad ones. But in order to get the good ones and in order to come out on the other end with the most profit, you have to be willing to sacrifice. Doing the right thing on any current trade could yield a really embarrassing situation.
Yeah, and I love that, Jerry, because you know, for me, most people think I'm the longest term trend following trader they know, and for you, you're a little bit more longer term than me. And honestly, I'd like to get there at some point, because considering, you're absolutely right, and I think this is a problem that new traders have so much, is if you really want to make money on the big swings, You've got to be able to hang in there. And so that brings me to a question. What would be the thing that you learned? What was your best lesson you learned from Richard Dennis during your turtle trading days? Something that you could pass on to the new traders in the audience.
Well, I think we actually asked Rich, where he told us what the two most important lessons are in trading. And one is to trade small and don't trade too large. And you're always, as a trader over the years, you're always think you're trading small enough, but you seldom are. And that is, and the second one is to follow your rules. And they're kind of connected, because so many times over my career, I've been unable to follow the rules because I was trading too large and losing too much money. So I had to immediately stop doing the trades, trade a lot smaller, or start picking and choosing which trades I wanted to do. So that's kind of the death. The most important thing for every systematic manager is to do all the trades. Don't miss any trades, and do the trades, and do them when you should do them. I can't tell you how much money I've left on the table not doing that. And a big part of it is overtrading is, and you hear other people who just make so much money. And you're like, wow, I wasn't a pig. I was too diversified. And I didn't press that bet. And you sort of regret that. And but in the long run, if you want to stay around for many, many years, the best thing to do is trade so you can sleep at night and trade. I think it's the one personal decision that you should make. You should follow the back test, even if you don't like the system and it doesn't fit your personality. You should do whatever the back test and the computer tells you to do. It's not going to be fun. It's going to be painful. So don't stop this search for finding something that you like and agree with. You're taking money out of the markets. If you do that, you'll be very fortunate. And so to try to do that and make it something that you're going to enjoy, I enjoy 1% a month or 2% every month. Well, that's ridiculous. So the one personal decision you can make, though, I think is fine, is that if you're very conservative and you can't sleep at night with plus and minus 5% days all the time, then trade smaller. And I think and you'll probably end up staying alive a lot longer as well.
So you're never changing anything from a system standpoint based on the environment. You won't say, oh, this is a risk on tape, I'm going to trade bigger or trade more. None of that.
Oh, absolutely not. I think over time, one of the things that happened after the turtles was we were back in the turtle days, we were doing this similar strategy, but it was much shorter term. And then sort of in the late 90s, we started saying, oh yeah, I think that the shorter term turtle trading is not, those parameters are not good enough. They don't seem to work very well in the back test any longer. Yeah. So I think moving those out to a longer term, as we've been talking about, that is the way to look at it and to make this change, but not try to pinpoint any sort of environment, risk on, risk off. I think the bottom line to trend following is you can't predict where these markets are going. And about the time you think you've identified some environment, it could dramatically switch on you.
Yeah. And trend trading also, the way Jerry does it, the way I do it, you're going to start to, like, if you're in an inflationary environment, you'll be long commodities across the board. If you're in a deflationary environment, you'll be long bonds and short commodities across the board. These things all kind of happen. But once again, it's the same theory of technical analysis or anything, which is wherever the trends go, that's what the environment is, and that's where you should be trading. So I love that you said that, Jerry. So I guess one thing I want to ask you too, because I think I took this phrase from you, but lumpy return. So you mentioned that earlier about 2% a month, people looking for 2% a month and how crazy that is. And so, why do you say returns are lumpy? You have this huge uptrend, you make a lot of money in a couple months, you have a flat period. Like, why would you say returns are lumpy, and why do you think that works for trend following traders?
Well, I think they're lumpy for a couple reasons. One is, as we discussed earlier, even when you get onto a good trend, it's going to be some give back. And if the computer will tell you, well, if you handle this trade, if you handle all of the trades historically in this way by accepting these give backs, you're going to make more money. Some of the trades will keep going, some of them won't. So there's some lumpiness there. But when you're in a strategy like trend following, where the vast majority of your profit is going to come from 5 to 10% of the trades, they're infrequent, and you're going to be chopping around and having some flat periods and choppy periods and slow drift downward periods. And then all of a sudden, out of nowhere, you'll start seeing some of these trends. It could come from a group like we saw in short the bonds in 2022, or it could come from individual markets like cocoa, OJ, and coffee, and the yen. Pretty much these outlier trades are very infrequent, and you don't know when they're going to show up. So it's not anything you can really rely upon. It's so critical for trend following strategy to not miss any trades. I think that's one of the biggest things ever. So when people talk about our exits more important than entries, I think exits are kind of important because they have more dispersion. You know, your shorter term system, if it gets out quickly, sometimes it may make a lot more money than the longer term system, or vice versa. But certainly the entries are so important, because if you take a trade and it goes against you, you're totally prepared. You're just going to take that small loss. It's inconsequential because you're not trading too large. You're very diversified. So all the losses are nothing. But if you miss a trade and it keeps going, you have no defense. There you sit, wondering, what was I thinking? Why did I not take that trade? And you know, the first trade out of the box in January 1984 for the turtles was long Feb heating oil. Not January, not March, it was February. There was a frozen harbor in New York City. They couldn't get the heating oil in. And that 1 month just skyrocketed. And maybe out of 12 people, maybe half the room actually had the trade on. What were the rest of us thinking? It's ridiculous. We had just come out of the turtle course. Don't miss a trade. And there I sat with no Feb heating oil.
Wow. So obviously your system puts a great deal of importance on these outliers. I think this is so topical for right now, because the best stocks in this market are so extended. You know, RSI's in the 90s, that some of the most extreme readings they've ever seen, but they're hanging up there. And in fact, some of them just keep going. So what kind of like tools are you specifically using to manage exits on some of these trades that just, go through the roof? Are you using trailing stops? How are you doing it?
Well, Bitcoin, that's a good one. Gold, gold's kind of uncomfortable. It's been a great trend. Now it seems to be selling off a bit, but we've seen that in this particular trade a few times. Silver. Yeah, I mean, it's only, we use breakouts, and so we just have these long-term breakouts that have been vetted through a back test. So it's a 100-day breakout lower or 200-day breakout lower, something in those areas, and everything in between for diversification that we will use. So we'll use a range of entries and exits, all basically back tested and approved. And thankfully, they all make about the same amount of money. They won't all make the same amount of money in these stock trades that you mentioned or Bitcoin, but over time they will. So there is no opportunity cost for diversifying your entries and exits. And like I said earlier, I think when you look at what the computer tells you, like, oh, you want to make money, good money, most money on a trade, you want to maximize that opportunity, this is how long-term you need to be with your breakouts. And you'll go, what? This is crazy. I mean, I don't want to be that long-term. Nobody does. You should try to trade as short-term as possible. But it's the markets these days won't accommodate that. There's too many other people. There's too many whipsaws, too much up and down, too many people trying to sell the highs.
Yeah. What would you say your average time frame of a trade is these days? Ballpark.
Yeah, once again, it's just an outcome of following the best breakout systems, and it's around 1 year.
Wow.
So obviously on some it's a lot shorter. Some of the losses are a lot shorter, but some of the big trends are 2 years, 3 years. I mean, I've seen trends. I think euro yen, that currency cross euro yen was probably a 5-year trade. I looked at that recently.
When you think of these primary, when you think of these primary trend cycles, a year makes sense, right? Because you're trying to catch, most of the meat of the primary trend, right?
Yeah, I mean, I really enjoy trading this way because it's like being a home run hitter, and talking about Judge and Otani and these guys who have memorable games, and you're part of this memorable, the Coco move, the OJ move, the coffee move that you can talk about for your whole career, about how wonderful, how much fun crude oil, some of these trades we've been in, versus like shorter term, trying to take little small bits out of the market, and you're kind of missing this big, huge macro picture and being part of that happened, over the years. It's very enjoyable to think about the career. Sometimes, I'm kind of messed up a little bit because I'll think about my years, my life years in terms of, what trended that year. So it's really fun to think about that.
You should write a book about all this.
I know I should. That's
Really?
a lot of work, but I think with AI, it might be possible.
Yeah, it's getting
Just
easier.
turn it on and start talking. Yeah.
So Jerry, there's another question. This comes up a lot to people at All Star, at my channel. This comes up all the time, which is if you're looking at, you were talking about heating oil earlier, and let's say you have heating oil in an uptrend, you have gasoline in an uptrend, you have CL oil in an uptrend. Hey, you might even, if for you might even have ones in different countries in an uptrend. Do you take all the positions, or do you just take one that you think will be the best?
Very good question, because I love answering this question. So for me, I'm obsessed with diversification. Okay, so I'm going to trade crude oil and Brent, WTI and Brent, heating oil, unleaded, gas oil, natural gas, all of these, and I'm doing it for diversification purposes. And then, so to some degree, you could say that trend followers, and Jerry in particular, they're so obsessed with diversification, but not to the extent that we're going to pick and choose at certain points in time. Do we want to put it all in heating oil or all in crude oil? And we know sometimes we're going to be over dedicated to a certain sector like energy when when we're long or short all of those markets. That's because of our overriding obsession with outlier hunting. So there has been times, like I said, with heating oil, where in 1984, crude didn't really move very much, and it was just the Feb heating oil. And I don't even think there was unleaded. And you can see that I've heard people talk about, don't remember seeing this, but the WTI crude moved a lot and Brent did not. So each of these markets, it's best to view them as very unique. And yes, they are correlated, but they can have their own individual move. Like silver in 1987 doubled in price and gold kind of sat there. The UK coffee is much stronger than the US coffee. And so once these individual markets have their own idiosyncratic move, this outlier move, it could be much greater than their cousins, then they'll all go back to being 90% correlated. And it's kind of a bummer to have a lot of a sector on and not pay attention to the fact that they're all kind of similar when you have a false breakout and you lose money. But you will get rewarded if you treat them individually and plan for the fact that you really can't predict when or if these markets will have one of the group will have a major move that the other ones don't really have.
And I love that. And the reason why I bring that up is that question comes to me all the time. And they think of it as, hey, this is when you don't make a lot of money, when you're too diversified. But as you said, and as I feel, the more you're taking these bets on, at some point you're making a lot of money. You do have a concentrated bet, but it's because of your systems hunting that outlier. So that's why I wanted to ask you that question. I'm glad you brought that up. So you guys heard it from Jerry, not from me.
Jerry, what advice do you have for traders in times like these? Big volatility. Everybody's making a lot of money. Everybody's very happy. Twitter, a lot of emotions on Twitter.
Oh, I think to tell people that it's okay to make less money than your friends. It's okay to have a systematic approach, take small losses, only pay attention to trends and technicals, and diversify like crazy. And you're going to have friends who are only in stocks, or they're concentrated in stocks to a much higher degree, or Bitcoin or gold. And it's okay to have your currency shorts and your bond shorts, a few commodities, and absolutely have some stocks on. There's great movement there and great diversification in stocks. We trade a lot of stocks, more than any other CTA probably in our trend following program. 50% of our portfolio can be in individual stocks, strictly because, look, if there was 5,000 commodities, that would be 50%, or 2,000 currencies, that would be 50% of the portfolio. There's a lot out there. You just got to get away from looking at these indices and thinking that's the market. The market is much deeper. It has a much better personality than what 7 stocks do to this, driving this S&P. But yeah, be okay with being safe, diversifying, putting yourself in a situation where you're going to make money over time, and don't worry about underperforming people who are taking, in essence, a lot higher risk, even though it doesn't look like it.
Yeah, that's great. What does your universe look like? Like, what kind of pond are you fishing in terms of the stock market? I'm sure you have market cap and liquidity filters, and maybe even quality filters. I don't know.
Just liquidity filters and diversification. We set up the whole portfolio, commodities, currencies, stocks, bonds, and we carved out a crypto section of the portfolio with
Wow,
Ethereum and Bitcoin and crypto digital type stocks.
Are you trading them spot, like on the crypto exchanges, or are you?
We're trading them as the ETFs, you know.
Got it. Yep.
Yeah. We used to trade the futures, but we trade the ETFs now.
Far more liquidity there now, right?
Yeah.
Crazy.
Yeah, it's really nice. Yeah.
Is that the reason why you switched from futures to the ETFs? Just the liquidity?
No, I switched because I have some smaller accounts, and those futures contracts are pretty large, and sometimes you can't even put on a one lot for a smaller account. So with the Bitcoin allows you for less rounding error. The ETFs allow you for less rounding error. It's a really bad answer, but that's the reason we did it. I love the futures, and we traded them for a lot until the Bitcoin ETF came out.
Yeah, it was hard when you got new clients, and until they actually had micros now. Those just came out kind of recently. So the micros made it a lot easier, but you're right. It got to a point at one point where you're like, I can't even trade this in most of my accounts. If you're managing money, it's hard to do that in multiple accounts.
And CTA is, part of the money management scheme is to size the trades based upon the volatility when you put the trade on. And so the high volatile markets, the big contracts are going to be small. And it's really, so nowadays it might be impossible to put a trade on for a small account in Bitcoin futures. And then the Bitcoin micro futures are, you're paying 5 times the commission or something. So we're kind of averse to doing that.
Yeah, it's a tough market. I might actually do the same as you, but I guess something to bring up, Jerry. So you brought up earlier volatility of positions. So if you're looking at something like Bitcoin, let's say it's $100,000 portfolio. What type of size of a position would you have for something like Bitcoin? And then what type of size would you have for a position, something like the dollar? Just to give people an example of how we set up position sizes as trend followers.
Well, like I said, we're going to set it up. I'm going to trade all the markets in my portfolio the same size, the same risk budget. So whenever I get an outlier trend, it's going to be an equal contributor. I'm going to normalize my losses. All the trades will, if they end up taking a loss, will lose the same dollar amount. But we're going to size those trades with our turtle formula based upon the volatility when we put the trade on. So sometimes if, in the same market, if the volatility in gold is $50 per day, then we'll do twice the position where maybe in the future it's $100 per day. So it's not just per market, but it's per time. Whenever we do a trade, we we look at the recent ATR, and then we sort of size the trade inversely to the ATR. And then for us, because we're good old-fashioned trend followers, we don't reduce the size of the position if volatility increases or correlation increases. We only use that volatility at the entry to normalize the losses. But so this is how you can really maximize that cocoa trade, because the volatility went up 10 or 20 or 30 times, and we sat there with the same position. And so for me, the only question I'm asking myself is it a profit? It's a profit. Then do not look at it. Just let it go, let it ride, maximize that profit. If it's a loss, whole different ballgame. I'm very conservative. I'm very nervous. I'm going to make that loss small. But I think so many people nowadays want to reduce that position in cocoa, for instance, as it gets kind of uncomfortable and dominates the portfolio and the volatility really increases. It's a secret strategy. They talk like it's risk management, but I think it's more like taking profits off the table. And because there is no real risk. I think another thing that people should not do is don't include massive profits in your bank account when you size your trade. You know, if you have this massive trade out there that could fluctuate and go down, don't include that profit in your capital when you plug that into your formula to size your trades, because that thing can keep going or it can go away. So that's another little secret that we picked up, where if we have a $1 million account, but we've run it up to 2 million, and that 100% gain is totally due to open trades that are wildly fluctuating, we'll continue to trade our account at $1 million level for a while until we start booking some of these profits. You want to be very careful with the dangers of compounding. Compounding open profits that can go away can lead to disaster.
And I love that, because it's a thing you and I have in common. You know, I don't vol target either, and I think it's very important to continue to do that. So, Jerry, I just want to thank you so much. As always, it's awesome to have you on. I always learn so much from you and watching you, and I hope everybody else did as well.
They love you in the chat, Jerry.
I've been trying to look at a couple of them. Thank you. Thanks, Jason. Steve, thanks for having me.
Jerry.
Always
Spencer,
such a pleasure.
it's
Appreciate
been fun.
Yeah, we're always very mindful of our guest time, and for someone like Jerry Parker to spend a half hour more than the half hour with us this morning is we don't take that for granted. So thank you very much.
Yep. Great guest this week, Spencer.
Cool, thanks. Appreciate it. Yeah, Eric Bachunas yesterday, Caleb Franzen, Andrew Moss, Jerry Parker. Next week we've got Kenny Polcari, Herb Greenberg.
Kenny.
Yeah, got some good names next week. Jason, you want to hang out, or
Let me hang out.
Your call, man.
I'd love to hang out. Yeah.
We talk about space stocks, Spencer. You have some earnings headlines to read, and then I want to talk about. Let's go to Mars and talk about some of these space and exploration names.
Let's go to Mars. All right. Well, the Disney's up this morning, which is exciting. Disney Plus is profitable. Hooray, profitability!
And they're looking for a new CEO. What are some?
That's not new news. But the headline you're referring to was, I think, from over the weekend, where they said there were some names dropped as to who this person could be, but at some point next year they're going to name a new CEO for like the third time, right?
Yeah.
Okay. Yeah. So maybe the name dropped was, I think, the CEO of EA. Again, just rumors at this point, but regardless, Disney has been hampered by this massive investment they've made in Disney Plus, which is not profitable for the first time. So that's exciting. The street likes it. The stock is up this morning. Their other numbers were good as well. EPS beat, revenue beat. Pretty much the big overhangs for them. I mentioned the streaming, and also the fact that they are still in the legacy TV business, which sucks, and nobody who's in that business wants to be in that business. But other than that, things are okay.
There have been some big moves on the activist front as well. Really, this Honeywell situation with Elliott more than anything. Have you heard about this?
Honeywell and Elliott?
They're more or less looking at what.
And
Yeah. So Elliott's in, I think, $5 billion stake, big enough stake that they're probably gonna be on the board, push some things around. They're looking at General Electric basically
this is
and
not
saying,
Disney. I
"What
was
the hell
confused.
are
This isn't
we?"
Disney.
No,
Oh,
sorry,
okay,
we're moving
okay,
on.
okay.
Enough
Sorry.
with Disney?
Yeah.
Yeah. It's other news. So Honeywell, it's a big industrial conglomerate, has a big aerospace and defense arm to
Yeah.
it as well. And what General Electric did over the past several years, breaking up into Vernova and the GE oil and gas, and then the GE aerospace and defense, which is now the main GE, it really unlocked a ton of shareholder value. Just go look at the charts, right? So now an activist coming into Honeywell, which is a close competitor, probably built pretty similar to GE, maybe more so than any other company, and wants to do the same playbook. See, this isn't really complicated. A lot of times what these activists are doing, they're saying, hey, your free cash flow is up 20%. Why don't you pay a bigger dividend or buy back some stock? Or they come in and say, hey, look at what your competitor did. Why don't you do the same thing? Unlock some value.
Yeah.
So they'll probably, I think, get what they want, because how can you say no? How can you say no at this point? When you look
The
at what
business
GE's
world
done.
exists on a spectrum. Everyone oscillates between conglomerate, breakup, conglomerate, breakup. Right? It's just go
Right.
back and forth,
And it's
forth.
fascinating. It's fascinating because, and this changes, it's dynamic. Obviously, it changes with regulations, and as the market kind of grows and develops over time, it changes. But it works. This model works far better for some industries or sectors, or really they're cross industry and sector when you become a conglomerate. But it works far better for some than others. And then you see that change over time. And then if it works too good, then it's an antitrust issue, so it stops working. So, yeah, it's markets are fun. Sure. What else we got from an earnings front? We didn't even talk about Spotify yesterday. Some of these music streaming businesses, absolutely incredible. Rewarded the stock even though they missed, just because of the user growth.
A lot of the charts look really good too.
Yeah, we had the David who runs the music ETF on, and apparently the economics in this industry are just fantastic. And he's not the only guy talking about this. This is kind of a big theme out there.
Spotify, that was its best day, I think, in a long time yesterday. But
so question for the chat then,
yeah.
How many people use Spotify?
How many people use it? How many people pay for it?
I use it. I pay for it.
I'm in. I pay for so many of these freaking subscriptions.
I don't
Netflix,
pay for it.
Spotify.
You don't? Okay.
Yeah.
So say whether you pay for it or whether you don't pay for it in the chat.
I use it, but I don't pay for it.
Yeah.
I pay for it.
I use.
But so what does that look like? Can you still listen to everything? You just
I don't use it very
ads?
often. Maybe a couple of times a month I'll throw on a playlist. But yeah, and there are ads, right? But that's the only difference. I don't know. I'm kind of stingy with my subscriptions. I'm mindful about that stuff because that shit adds up.
It adds up. Adds up.
I'm very mindful about the subscriptions that I pay and don't pay for.
YouTube does this awesome thing where sometimes instead of showing you advertisements on YouTube TV, I'm talking about, instead of advertisements, this is great. Like, I need more of this because I have the TV on way too much, as you guys know. They'll do like, a fire burning or waves washing up on the ocean. And God, is it lovely. Like, once you get used to it, I can't go back to commercials. I can't go back to commercials. I want the nature noises now. The nature noises. And then Kramer comes back on and starts fucking screaming. But for like 5 minutes, you're so zen. It's great.
Yeah, that's a tough.
Looks like a lot of people use it paid versions too. So that's interesting. Thanks, guys, in the chat.
Yeah, these companies are really doing it. Space stocks, Spencer. I know there's more from earnings. I don't know what
I mean, there is, but not at all. It's interesting, right? I mean,
well, maybe it's interesting to everybody else.
I don't know, like. Sonos, like Ibotta, like I don't know if I don't even know if I care about some of these names, right? We had Take-Two Interactive. I looked at that one.
Dude, they make Grand Theft Auto.
I haven't looked at Take-Two in a long time, actually.
I love me some GTA. Best video game ever? No, man.
Wait, no, Take-Two was what the hell? Take-Two was last week. Why am I seeing that now? Oh, because there was a headline about whatever. Doesn't matter. Oh, Disney was kind of like the big one of the day, right?
Well, people own other stocks outside of just the big boring stocks, So So
Yeah, but as much as
Lunar had
I
our-
hate to say, JC's kind of like rubbing off on me. Where I used to be like, "Oh, D local is up 10%," but now I'm like, "Oh, who cares about D local being up 10%? I don't even know what that stock is."
You know,
Oh.
are you not reading the things that we're writing and hearing the things that we're saying about how it's time to own the worst stocks? And you're poo-pooing names like D-Local. D-Local, this is an awesome one. Sam loves the D-Local. This is in our Amazon of universe, I believe, is it not? What's the ticker symbol on
DLO.
this crazy thing? On the down low, the D-Local's got a sweet base. So, wow, look at this thing. $9 above $9. Let's go, baby. They're squeezing, and even some of these stocks that don't have high short interest, but they're just memey in nature, the price action, it looks like they have a short interest, right? Like once momentum comes into these names, I don't know how it even happens. I don't know, are they talking about them on Reddit? Is Wall Street Bets back? I have no idea, but this is a great example of up 15% here.
Oh, I did want to mention Cisco. Sorry, that was the one.
Another boring stock. Okay.
This poor thing. Actually, it's up this morning, right? Yeah, it's up. What are we up now? Cisco? Oh no, it's not. I take that back. It's down 2%. But it was all green after hours. Earnings beat, revenue beat. They raised their guidance for the quarter and for the year, and for the EPS and for the revenue. So it's basically just a full guidance beat across the board. And we're down this morning. Is that true? Yeah. Well,
this sounds like a stock you would own.
No, definitely not.
You own
Definitely not. Never have. I mean, I'm sure I own it in like an index fund somewhere, but no.
Yeah. But Disney, you're still in. You and JC.
Well, I only own like 6 individual stocks right now. Only one of them is like a true trade. The rest are kind of long-term things. So, Disney's not a trade for me.
We almost went to Disney on our way back from Georgia. Thought about it. There was a moment there where we were like driving towards Disney. Called it off. The cryptos started mooning, so we kept driving home.
Hard to multitask at Disney. You have to be focused.
Like, I'm not gonna miss.
Oh yeah, we're talking about earnings and cryptos, moving hot. So why are we even talking about earnings anymore? Don't need earnings anymore. I'm just kidding.
No, I don't think that's wrong. In a bull market, does it really matter?
I don't think so.
One of my
I've never looked. I haven't looked at earnings in years. And people always like hate on me for that. And they're like, "How do you trade then?" It's like, because I really don't pay any attention to it. If you ask Jerry Parker, he'd tell you the same thing. He has no idea what the earnings of anything he's trading is.
I didn't know that he started in the Big Four. That's just. I was saying the other day on Twitter Spaces, and you were all laughing at me. I was like, accountants make the best traders. I truly believe this. That's not as unique of a story as you think. So
well, he did say he regretted it.
Yeah, of course, they all regret it. That's why they become traders. You know how crazy you have to be to want to become a trader? You have to literally be sitting in an audit room, being tortured, smelling Chinese food all day. They call it FaceTime, right? Because it's the only way to justify like paying somebody millions of dollars for a 3-4 month engagement, right? So you have to sit in the office and make it look like you're working really hard. But then you order like Uber Eats and everybody eats pasta at 5 or 6 o'clock and goes into a food coma. So no one's productive. So you're just sitting in an office thinking about like, how did I get here? Like what did I do that this is my life? And you're willing to do anything. And then these Big Four people, they become great traders because they sit there in that audit room and they got 6 hours every night and they start reading all the books and they start learning. And they're like, there's got to be another way. I got to get out of here. And then you have Jerry Parker turning into a turtle trader. This is how it happens. It's how it starts. So
I think you're absolutely right, though. I think that's a spot on observation. Because traders are crazy. Like if people always look at traders and they're like, okay, they're this type of person or this type of person are really smart or something. It's like most of the time our backstories are insane. Something that we either hated our lives doing something for a while or almost died. Like it's always some crazy story. And so you're probably there's pain of some sort. Yes.
There's pain in all of, so we're learning this. I always thought it was true, Jason, and you've talked to a lot of traders too, but we've been doing this off the charts series and it's so true. There's pain in all of these stories. You have to like pry and pick it out of them sometimes, but if you push far enough, you find the pain there.
It takes a certain emotional fortitude to last, right, and survive. people.
Well, if you're managing your own money, it's hard as hell. It's the hardest thing you'll ever do in the world. But then add to managing other people's money and then taking on their anxiety and stresses. And that's the thing that, like, okay, now you're actually a crazy person. Like, you want to do this. It's really, really insane.
Look at all my shout out bean counters. Look at all my accountants coming out of the woodwork in the chat. See, this is a thing. This is a thing. Larry knows. Yeah, Larry, I know Larry. Yeah.
Oh, I agree. I didn't tell you that was a bad idea. I think you're spot on it. I think it's true. most people have some weird thing in their past, and they end up becoming traders because of it. Because you have to be able to handle a lot of pain and a lot of stress, and then figure out like how. Because it takes time to be a good trader. Like Jerry or anybody will tell you, it wasn't something that came overnight. It takes time. So you have to continue to be able to push through it. And how do you do that? Well, your backstory. What's your backstory, your cornerstone that kind of keeps you going through those bad times? So I agree.
And the best thing he said today was, and I think it's so topical for times like these, it's okay to make less money than your friends. It's okay to definitely make less money than everybody bragging about how much money they're making on the internet. It's so,
and you never know. That's the thing that I always try to tell people. You never know. If you're on Twitter and you see somebody writing that, oh, check out my trade, and they post their trade, that the one trade they did that has up 1,000% or something, that could be 1 out of 50 trades. You have no idea what their account looks like year over year or anything like that. So but everybody, that's what we do as humans. It's keeping up with the Joneses. But when people tell you that this takes time and it's hard, people don't want to hear that. They want to hear the dude who's telling you got 1,000% return in 5 minutes.
We should start a movement and only post about our losers. I'm gonna go post about like the end phase trade that I got slaughtered.
I have a whole page like that, Steve.
Yeah. No, listen. If you're really doing this thing, it happens all the time.
Yeah.
Trust me.
We post all of our losers and all of our winners, man. I mean, and that's because it's part of the game. Like Jerry said, like if you're sized correctly, your losers don't matter. What he's saying there is if you're 1 to 5 leverage, meaning you're taking a 1% loss to make 5% of your portfolio. That means you only have to be right 20% of the time to make money.
Yeah. Actually, Sean can speak to this as well. So let's bring Sean in here, and if I'm sure he has opinions on what we're talking about.
What's happening? Hey, you were mentioning the Off the Charts podcast and pain. The guest we have on tomorrow, great guy, and he speaks to that very explicitly. And you can see it. You can see it in his voice. You can see it in the stories that he tells. If you're doing it right, if you've been trading for a long time, you've been through some shit and you've been through some pain, and people can read it on your face. And tomorrow's guest gets into that. So, yes. 100%.
Do you want to tease who it is?
Let's save that for tomorrow. Let's keep people waiting. Big guest tomorrow. Very excited.
Big guest.
Hey, I shared a chart with you guys in the channel. I don't know if you guys brought that up. I want to have a little teachable moment here with options trading. If you guys will indulge me. There it is. All right.
Oh yeah.
So you can see this ARC trade. This ARC chart has just ripped higher. Is it mostly driven by Tesla, guys? I mean, is that the reason why this thing's ripping? I mean, there's a lot of reasons, but
they're all working. There are so many just textbook trend reversals happening in these components right now. Tesla's a lot of it, but it's broad.
All right, it's not the only reason, but it's a big reason. But anyway, none of that matters. All that we care about is price, right? I talk about this all the time with options trading, that options give us options. Okay. So I'm going to kind of walk through what's going on with this ARC trade that we're in right now, because I think it has, some nuggets here. You can see on that red arrow there, we point into mid-September. That's when we put a trade on. We did a different version of a call calendar spread. A typical call calendar spread means you're buying the option that you want to buy further out, right? The strike, and then you sell that same strike in a nearer month to lower your cost, right? That's a traditional calendar spread. In this case, we did a diagonal spread where we worked at different strikes. So in this case, I wanted to own the March 55 calls, but I sold the November 53 calls against it the biggest reason being that the March or the November 55 calls didn't have a whole lot of premium. So I sold the November 53s and I brought my net debit to put that trade on $1.25. So that's the most I could lose in that trade. Well, typically when a calendar spread goes in your favor and the underlying trades up to your strike prices, you have a choice to make. You could let it ride and maybe the rally kind of fades and comes back a little bit. But you risk, if the stock keeps going, you actually get on the backside of your profit potential. I should have brought a profit chart for you guys. But if you actually let the stock go too far, you can actually lose money in the trade. That's not a good situation. So generally speaking, when a calendar spread, when it trades to your strike, you just take it off, you book the profit, and you move on. With a diagonal spread, similar situation, but it's a little bit different because of the mixed strikes. But with this stock moved so fast. When we got up to 54, now remember, I'm short the November 53 calls. I'm long the March 55 calls. When we got to 54 here a few days ago, I played a little defense. And I call it like an aggressive defense because we actually did it and brought credit in. What I did was those November 53 calls that are now in the money, which is a bad thing when you're holding short calls, right? I rolled those calls I rolled them out a month. So from November to December, and I rolled them up a strike to 54, which was the at the money strike at the time I did the trade. And I brought in 92 cents credit. Now what that does is, remember, I paid $1.25 to get in. I've just now taken 92 cents out. So now my max risk in the trade is what, 38 cents at this point? Not bad. Well, ARK kept going. It kept ripping. So it got up to 55, the next strike. I rolled it again. I rolled my December 54 calls out to March. March was my next option. Or no, I rolled them to March because in January, if I rolled them to the January 57 calls, I actually would have paid a debit to do that. I don't like doing that. It's nothing wrong with that, but I don't like doing that. So I rolled it out to March to the 57 strike, which was the at the money strike, and brought in another 55 cent credit. So now I've brought in 55 cents and 92 cents. Net that against the $1.25 I paid. I've locked in 22 cents. So this ARK can roll completely over, go to zero. At least I'm walking away with a 22 cent profit. Not the profit I was looking for when I put the trade on, but it's a first class problem to have, right? It's not working. I could still make money. Now, what this trade now has become, and this is where I'm getting questions in my chat room, because I am now short the March 57 calls while still long the March 55 calls that I bought on day one, this trade has now become a traditional call bull call spread. So I'm long the 55 calls and I'm short the 57 calls in the same expiration. It's a traditional vertical call spread or a bull call spread, whatever you want to call it. And the questions I'm getting in my chat are, well, when you have a bull call spread, Sean, don't you usually sell it and take the profit when the short call goes in the money, which in this case, well, it's not anymore, but it was briefly yesterday when I was trading above 57. And my answer was yes. If I had originally gotten into a bull call spread, and that was the trade from minute one, from day one, if the stock went my way and it traded through my strikes and it's above my short call strike, generally, yes, I would take my profit because my profits are capped at that point. Let's take the profit and go away. But in this case, because these were adjustments that moved this spread into a vertical call spread, what I am doing now is I'm not taking the profit. I already have a guaranteed profit, right? I'm playing with house money. I've got that 22 cents locked in, like I said. Now I'm letting theta, or I'm hoping to let theta kind of work in my favor. And I want that value of that spread. The most that spread could be worth is $2. And that's because the long call strike at 55 and the short call strike at 57, the difference between the two strikes is $2. The most that spread could be worth is $2. All right. So I'm letting this trade roll now because the trend is my friend. And I have now put a good till cancel limit order to sell my spread that can most be worth $2. I got a limit order to sell for $1.60. Now, why $1.60? Did I just make that number up? Kind of. I often subscribe to the 80-20 rule, right? When you've earned 80% of the maximum value of something and you can't go anymore, just take it off because now you're risking 80% of the value of the spread to make an extra 20%. And I don't like that math. But right now I'm holding this spread and I'd like to get $1.60 for it. And if the trend continues, I will. If the trend completely reverses, I actually have two options. There's two things that can happen if the trend completely reverses. I could not do anything and the spread goes away and ends up being a 0. I'm still walking away a winner because I've locked in those 22 cents. Or if I want to be aggressive and I want to be, I want to manage this trade a little bit, I could trade around this position. And if as ARK comes back a little bit, those 57 calls that I sold, maybe I buy them back for cheaper than I sold them for, right? And then I'm just left with the long March 55 calls, which is what I always wanted to be originally. But maybe one way to think about it is think about the 22 cents that I've got locked in as profit, right? Maybe what you can do, and maybe might be what I do, is I might leave a good till cancel order to cover my March 57 calls that I'm short. Maybe I put an order in to cover them at 22 cents. So if I buy them back for 22 cents, now I can't lose, I can't win, right? I've given back my little locked in profit, but now I'm holding the March 55 calls absolutely free. And if the thing continues ripping higher, I'm in a good position with unlimited upside. So I went through that a lot very fast. I had only a couple of minutes to talk about it. I hope I didn't lose anybody, but this is just an example of where options give us options.
No, and that's great, Sean. This one really worked out. Would you say that a certain chart pattern or chart formation lends itself to this strategy more than another? Like in the case of ARK, I think you wanted it because we had that base breakout level. We still weren't quite there yet. Is that right?
I did the call calendar spread because we were looking at the 55 calls, but it felt to me that, it felt to me it would take a little longer to get there. I didn't think it was going to move this fast. Again, first class problem to have,
right.
But
usually doesn't happen this fast.
So generally when I'm doing a call calendar spread, it's because I'm bullish on something, but I think it might take its time and I want to, reduce my cost.
Sure. So a base that's still hasn't resolved yet. Perfect. And this one, you were in the trade as the resolution.
And you can see, I mean, where that red arrow is pointing, that's the day we got into the trade. You could see for about 4 weeks, the stock did absolutely nothing for us, right? It was just kind of mucking around. It didn't stop us out, never hit our stop loss levels, but it wasn't working for us. It took the election follow through for us to really get going.
Yeah. All right, great. Recess, baby.
Oh,
fast market.
Okay.
Yep. Shout out Matt with the next nav, 127%. I'm feeding the ducks. This one's still running. Sorry, go ahead, Sean.
I was noticing Jason's dog mom coffee mug, and I was having a little chuckle about that. And then I realized that I have my check this out, custom made coffee mug. My son made. So my son's a wiffle ball nut, right? And him and his friends play, like, have teams and they have names. And my son created a logo using AI for his team. He calls his team the Power Pandas.
Ooh,
look at that logo. My son, he's 10 years old. He made that.
I thought that was for sure an NFT. Honestly, I'm not gonna lie to you.
How awesome is that?
We got to get him involved. We need help on the AI front.
Well, I was sitting here on the Dogmon Cup, and I didn't even notice until I drank it. And I was like, "Oh, that's gonna be funny." And nobody said it in the chat. I was really surprised, but
I caught it, Jason.
I'm glad you did, Sean. Glad you did. That's why I hung out waiting for you, Sean.
Jason, I'm glad you got a chance to jump in with Jerry. Jerry's awesome. I passed the baton to you because I've been in with Jerry before, so I thought you would appreciate that. And man, Jerry's the best.
Yeah, I love Jerry. I brought him on a bunch of times. We've talked through strategies and stuff together over the years. Like, he's just a great guy, very open. And I think that's something that everybody can take home with them. Like, this guy will tell you, like, and most of us trend traders, like, we'll tell you our systems and strategies. The thing is, you have to have the discipline to follow it. So that's why we tell you about back testing it and doing it yourself. But Jerry's a great guy. Thanks for letting me do that, guys. That was a lot of fun.
I say this all the time to people. If I can go back in time to the day one as a trader, I would like to reincarnate myself as Jerry Parker. Like, that guy, he's doing it right.
He's great. Jerry's a guy who you could talk to, and you're like, he's really got it figured out. So it's just so great to listen to. Shout out Outliers, right? I'm still thinking about, the comments he made about outliers. At one point he said, it's like being a home run hitter. And I think, environments like these, market rallies like these, sparked by, this election catalyst event here, you're going to have a lot of outliers. And these are the trades that make your year, right? That make your system work. So you got to manage them appropriately, but still let them ride. I mean, I would love to sit with Jerry and talk for another hour just about how he manages out of his winners, because it's a really important part of what we do. And a lot of us are doing it right now.
They don't only
So
make your
shout out
years,
to
they
him.
make your career. I mean, if you look at trend traders, and what's really interesting, if you go back and look at these times like, 2020, 2008, like where everything's heading one direction, and even years that nobody else is making money, the trend traders make a lot of money in those years because everything's moving in a big direction, and they're the ones really hanging on to it. Those outliers, like that's something that everybody can take home with them. Sean in options, you understand that. Steve, obviously you've taken some really amazing trades lately. It's the same thing. You're catching big outliers. And for me, like that's my entire life as a trader, trying to find the next outlier.
Well, you know what, Steve? I think Jerry would give you an unsatisfying answer on that. When he has a big winner, big outlier winner, he actually doesn't do anything different.
Yeah,
he follows his plan. He's taken that volatility and he's riding with it, good or bad. But he's in that Zen place. He trusts the system. He knows that's part of the deal.
It's really something.
Yeah.
All right, what's coming up today? We have the options jam session at noon, chart request live at 1. Here's the calendar. What's not on this graphic, because it's only for members, is in an hour from now, right? Yeah, 11 o'clock. Straza's doing the weekly breakout multiplier video where he's going to run through all the doubles. I have stopped counting, Steve, honestly, as to how many you have had in the last week and a half, 2-3 weeks, honestly. So if you're not in breakout multiplier, I will drop the link in the chat right now. I'll also throw it on the screen via a QR code. There it is, right over Sean and Steve's faces.
We'll be talking about how we're managing our outliers today. A lot of them.
Yeah, a lot of doubles in the breakout multiplier. A lot going on there. Thanks to Jerry Parker. Thanks, Jason Purvis. Thanks, Sean, for hanging out. We appreciate it. Thanks, chat. Go make some money. And we'll see you later, all right? See you.
Bye, everybody.
I can't take no loss. I don't even know what it costs.